It's been a stellar rise for Indian capital markets over the past decade for sure, and while demat accounts have soared over 5x in the last 5 years itself, SIP flows have been a very steady uptrend. Now, with over 2.5 lakh crores in the hands of consumers thanks to the GST rate cuts and income tax benefits, the big question is, will this also lead to higher flows into capital markets? Sharad, my colleague, is here with some analysis.
Well, yes, financialization of savings is a very big major trend for the Indian markets. And if you look at the rise in demat accounts, 5 years ago in 2020, this number was just 4 crore. Now that has gone up almost 5 times and is currently standing at 20.5 crore demat accounts when you add both CDSL and NSDL numbers. Now looking at the SIP numbers in the year 2020, they were ranging between 8,000 to 7,000 odd crore rupees on a monthly basis, and now that has gone up 4 times, almost more than 28,000 crore rupees as per the data from AMFI. So we can see the demat account, there has been a big up move. The monthly SIPs, that has also given a very strong up move for the overall investors. Now the net equity flows, that has also significantly jumped in, and we have taken the averages and we see it was roughly 22 to 25,000 odd crore rupees on a monthly basis, but now these numbers are going past the 25,000 crore mark, and for the 55th straight month we saw equity inflows coming in the overall schemes. Now also PM Modi's comment on the GST savings is very important, and he had stated that the income tax relief and the GST rate cuts could result in 2.5 lakh crore rupees of savings, and we are moving forward by following the mantra of Nagrik Devo Bhava. So a lot of savings, that means there will be investments as well from the Indian households, and the under-penetration is very significant when it comes to investment. Now, of course, the investment penetration is just 3 to 4% of the total population as per the economic survey, and for the direct equity exposure, it's only 12% of the entire population which is having demat accounts. So there's a huge scope for financialization of savings as we go ahead.
Sharad, we leave it at that. Well, that's the size and the opportunity that the mutual fund industry is staring at. But can the latest GST rationalization slabs or slab rationalization, which does put more money in the hands of household savings, can it really translate and find its way into mutual funds or not? Who better than A. Bala, MD and CEO at Aditya Birla Sun Life AMC, and Feroze Azeez, joint CEO at Anand Rathi Wealth, here in the studio to answer exactly that question. Bala, Feroze, thank you so much for your time. Bala, let me start off with you. Does it seem like any of that household saving is going to find its way to mutual funds?
I think the way in the industry has gone about building, the saving should come to the mutual fund participant in the capital market. It has been a great success the industry has met with. The reason I am saying is mutual fund means people always used to think it is equivalent to stocks and there is risky, volatile and so on and so forth. But the habit of savings completely got changed due to the awareness program which the industry undertook 7-8 years back. Sometimes in a public forum, even if you are asked a question to the people, that how many have invested in mutual fund, the number of hands will go up will be less. Then when you reverse the question, how many have invested in SIPs, the number of hands will go up significantly. Even the entire hall will raise their hand. So that is the way the SIP has now become the way of life for investing public. This in my view will continue. The second important factor is what are the other investment options that we have. So gold, I don't need to even sell to anybody, because gold is something which anyway part and parcel of every household savings. Silver, not in the form of metal, silver is always in the form of vessels types. So every Indian citizens do have a silver investment, but not as good as gold, but these two investments coexist most of the time in every household in the country. The only investment which is not existing is the mutual fund SIP, and FD has always been there, recurring deposit FDs. Given the fact that interest rates, I think Reserve Bank of India has been cutting interest rates, banks have been cutting interest rates, even the savings account you give only about 2.5%. Therefore, the SIP investing in the mutual funds have now become the a very strong alternate for the traditional savings which investors have been undertaking all these years. And last but not the least, I think Indian market, if you look at Dow Jones in the US, for 14 years the curve has been upward territory. 14 years continuously remained strong, and people have made a lot of money in the equity. I think equity cult in the US also I think increased significantly because of the low interest rate regime. The same way for India also, if you look at compared to any other investment, safety returns have been over, say, so lower single digit, double digit you can say, but over, say 10% kind of thing, so last say 5 years, 10 years, 15 years. So that's something that's been extremely powerful for investors to stay convinced of investing in SAP is a way of life. That's something which I think is coming. And finally, in the F&O market, I think when SEBI figured out that F&Os will are losing money, people also realized, say I can go and speculate myself, but at the end of the day, if I don't make money, somewhere I come to actually to the instrument which can help me save for long term. That also change trend also I am seeing it happening.
So it's changing into a savings instrument rather than an investment vehicle for the retail investors in that sense?
Yes, see, what happens is Indians are great savers, but very bad investors. Used to be. Okay, still HNI is a very bad investor in India, and I'll give you data to prove that. Of course, I am in the business of HNI wealth management. I'm saying they're very bad, and they're worse off than retail. You look at data of when HNI sold in FY21, where Nifty averaged for the 260 days it opened, averaged at 10,800 in FY21. That year, equity mutual funds other than SIPs lost about 1,25,000. PMSs lost 2 lakh crores plus 1,25,000 crores on a small base. 20% equity निकाल दी लोगों ने जब निफ्टी 10,750 पे average थी. SIP was the only one which was positive, 88,000 crores. So that's one. And I'm just giving you one data point, but there's any hypothesis has to be tested in different ways to get a significant result. Now coming to whether retail is looking at this as a savings instrument, he is or she is, because they've stopped checking their values. Ask your shopper whether he's seen his SIP value, he will tell you, no, I've not seen it for the last 6 months. If that's true, then you are playing on the strength of the Indian DNA. Point one. Point two, I think Indian DNA was designed by the government to be riskless.
Yes.
Because India ki fiscal deficit, kaun fund karta? Foreigner was never buying Indian bond. So Indian fiscal deficit for decades had to be funded by Indian households.
Through banks.
Through banks. What happened in 2021? Government said, now you've brought us so far. I am now bringing a new tax regime. No motivation for debt. That's the second thing. You have to see this GST in that context. Third, like Bala sir said, derivative ko curtail kiya. Online gaming ko curtail ki. Because those are all strategically wrong decisions for an individual. So point is, if you look at all of this and then read the 15 lakh crores which has come in by domestic institutions in the capital markets after FY21, 15 lakh crore domestic institution ने equity market में डाला है. उसी दौर में FII ने zero डाला है. नेट वो zero हो गया after COVID. उसके 8 साल पहले कैसे आंकड़े थे? Let's look at it. 8 years, cumulatively domestic institution put 3 lakh crores. In the subsequent post-COVID, they put 15 lakh crores. Statistical projections in 3 methods tell me that the minimum number will be 52 lakh crores infused by domestic institution in Indian capital market over the next 8 years.
So that's a huge amount, right? Means we've seen government coming out with the GST cut. The purpose was to push consumption, but I think the savings would be now going to consumption, equities, and maybe fixed FDs actually.
Absolutely. I think the irony is 950 lakh crores of Indian household savings are there as per March 25 RBI data and collated data. In that, half of it is financial assets. Out of that, 38 lakh crores is in direct equity of individuals and HUFs, and 29 lakh crores is there in mutual fund. So total kitna was 70 lakh crore on a base of 950 lakh crore. And still the FD guy is crying that equity paisa le gayi. Last year FD mein gaya tha, 53% of India's household savings went into FD, and that guy is keeping a 3% ye kyun le ja raha hai? Right? तो फिर equity में पैसा बनता है तो long term में किस में बनता है? FD से कोई आदमी नहीं हुआ. So point is, I am very glad that the Indian retail is acknowledging the government's push towards taking calibrated risk to get inflation beating returns. And Bala sir's kind of companies are doing a great job being the fiduciaries of that responsibility.
But Bala, we all know that mutual fund industry still, I would say, is at a very nascent stage. The penetration is still very urban-centric, and now it's trickling down to, tier 2, 3 cities. Can it really migrate to the deeper end of the curve? And can we have more people coming to the SIP gambit now with more savings?
I think we are in that trend. Just give you some numbers. When we launched this awareness about mutual fund, I think it was in the year 2016, there are only about 2 crore unique customers. Maybe not even 2 crore, 1.8 crore unique customers used to have. And the contribution coming from cities like B15, we used to call T15, B15. And the B15 contribution used to be only about 7%, T15 used to be the rest of them. And now it has become T30 and B30. B30 contribution now is about 26%, and T30 is not that T30 is not growing. T30 is also growing. The wealth effect is not just coming only in the T30 cities. The wealth effect is also coming across the nation. And the last is, if you look at the number of PIN codes in which it is coming, that number keeps rising, which is nothing but a reflection of the participation of investors across different parts of the country to invest in mutual fund. That's something will come. And increasingly, people like us, see, this year too, we have added another about 30 new branches in smaller locations. And our whole plan is to have presence of 543 MP locations in the country to create our own presence. So at the same time, technology has ensured that it reaches every nook and corner of the country. Therefore, usage of technology is not restricted only to the T30. Usage of technology is actually available in every part of the country. And given the fact that culture is changing, and also the online investing also now is becoming as a concept, everyone has understood. Therefore, this number will only keep rising. So that's I think you use the word as a nascent industry. So I'm in the industry for the last 32 years. We still think it's a nascent industry. That essentially means how much opportunity is still left.
Exactly.
I think you mentioned about you mentioned about 15 lakh crore is the one which can go into the equity capital market next 5-10 years. So that much of potential is still there. Maybe more participants will come. Indian companies also will raise equity capital from the market so they can grow the business. As a result of that, I think overall the expectation that we have for India to become $10 trillion would not be a distant dream for us.
So Bala, we've seen in the last 6 months a trend of a lot of passive funds coming into the market. Newer fund houses who are only passive, launching passive funds. How do you see their future? Because that's also one of the vehicles which retail investors can use through SIPs and invest with because the cost structure is much simpler and leaner for them as compared to them, and they don't have to worry with respect to the daily fluctuation, because the fund manager will make sure that as the index moves, his NAV moves.
So I think the way I see is, I think passive as a product will always coexist. I think the asset managers are duty bound to give choices to the investors. They can't say that this is the only segment I'll be there, this is the only segment I'll not be there. People like us who have been in the market for more than 3 decades, offering products in multiple categories, right from thematic to the actively managed funds to the passive, this will always coexist. As the industry becoming bigger and bigger, definitely, of course, fund managers to beat the benchmark would go through some kind of tough times. They always go through the cycle period. At the same time, given the fact that Indian market is also getting expanded, I think mentioned about capital market, what Feroze mentioned about, this is new segment, right? This all doesn't come through this index kind of investing, it comes through the stock picking ability. So fund manager always bring in his ability to pick stocks and sectors on a timely basis, depending upon how the situation evolves at that point of time, and differentiate on the basis of stock selection in every portfolio. That's what he does. So therefore, from a money manager's point of view, the active managers will continue to focus on giving to 1 or 2% over the benchmark over a period of time. We can't measure on the basis of the short term. And as the index levels keeps changing, stock selections keep changing, the mix of stocks in the index keep changing, the money manager also will adjust to the new opportunities that are coming in. But both will coexist. I think what matters from the customer's point of view is not the cost. I think cost what he is paying actually is not the way the investments are always driven. It's about asset allocations. In the asset allocations, whatever has to be mixed. Or sometimes we suggest even gold as investment. Even today, the mutual funds have discovered a multi-asset allocation fund.
Yeah.
Whereas about 4 years back it was not there. It has come only in the last 4-5 years. Given the fact that we also felt a gold asset class could be part of the portfolio, silver and asset class can be part of the portfolio, Retail InvIT can be part of the portfolio, therefore multi-asset allocation fund has come. So this kind of revelation always keep happening. From a customer point of view, investor's point of view, I think Feroze kind of financial advisor always there to tell them actually how to actually have the mix of portfolios in their portfolio, whether it is HNIs or family office or retail. So those things will always be actually an influencing factor from investor's point of view. But people actually choose, no, I'll be only in passive. But that's the way you would build the business. People like us will have a bouquet of product across business segment, including alternate business, PMS. We'll have we'll come to our product, we'll find everything in our menu. So that's something individuals will choose.
Feroze, as technology comes into play, platform is something which the industry is moving towards. And when platforms are at play, is it better and easier to push passive funds or active funds?
See, passive funds and active fund debate. In India, indices are formed very weirdly. Okay,
so I agree with you. When you gave an earnings example just a while back.
Earnings example to theek hai. Now Bala sir is in the index committee of NSE.
Yeah.
And I would ask him to represent also.
Right person to pitch it to.
You know, if somebody who has invested in an index fund does not have an answer to the following question which I'm going to ask, that means you are buying what you don't know. There are 130 companies approximately, more than $1 billion, who are not a part of NSE 500, whereas the smallest constituent of NSE 500 is 4,700 crore market cap. Why were these 130 not a part of the top 500 when 4,700 made the cut? If you read the 6 rules, the first one of the funny rules is that if you have to come into 500, you have to beat 350th. Okay, why is that rule there? Then I of course checked with the index committee in the index department, saying that why 350? If I have to win a race of 500, I have to be 499.
Yeah.
My son runs a school race. If he comes third, he has to come second, beat second. But why this 350th ka rule? There are 2 rules which says you have to be 350th on 31st July and 31st Jan. That is because the index changes should be fewer. So 350 is when you enter, 800 is when you exit. 350's market cap is 13,000, 14,000. The day I saw, 800's market cap was 900 crores. So if you get a seat inside NSE 500, if you become 13,000 crores, and you will not be thrown out till you go down 93% in value, right? Why are indices in India 500? MSCI small cap index had 464 stocks. Yes. Why is the foreigner tracking 464 stocks and why is the Indian fund manager tracking 250? How was MSCI creating index? US is at least 50 years ahead in terms of passive investing. If you are operating in India, you have to acknowledge the cards you are dealt with.
Sure.
So these big AMCs who are only going to do passive could be a great pitch for cost, but destruction of value.
No, because if you look at MSCI India, 5 years ago there was only 80 stocks and now it's 160 stocks. So the expansion of stocks within the coverage for MSCI as an is doubled.
Yeah.
But we are still stuck with those 50, 100, 150, 250, 500.
Because they look at, I actually met MSCI, took their subscription to understand, probably that's a topic for another day, but they don't look at the number of stocks, they look at the coverage of the market cap.
Yes.
Top 70% is large cap, next 15% is mid cap, 14% is small cap, 1% is not there in any index.
Again, coming back to the question of fund flows, which is there, domestic investors have been supporting the market despite the fact that you have so much of outflows coming from the foreign investors. We began the year with 22,000 crores of monthly SIPs. We are now at 28,000 at the end of August. As this household savings increases because of the tax cuts, GST cuts, RBI EMI cuts, or rate cut because of which EMI comes, do you see constantly this SIP figures to go up to almost 35,000 by the end of this financial year?
See, the trend is upward trajectory. I think that
because even in a market which is falling, we see the SIP flows to be constant.
That is because of it has now become a habit, is becoming accepted way of investing the surpluses. The common question now is coming is when should I invest in market? The question doesn't come. Should I start an SIP from today onwards and start investing, including STP? Even for lump sum investment, people are preferring to spread over time and invest. That has now become a habit. Secondly, if you look at the per capita income, I think we look at the income levels. So often I always say that social benefit scheme the government is giving, it's also increasing the per capita income of people at the who is the beneficiary of this product. Second is agriculture income has been rising. In the last few years, agriculture income has been, this year again is going to be one of the best monsoon. Abdul knows the disruption, except 1 or 2 states. We didn't have any disruptions because of the heavy rain. I think crops have been protected very good. Agriculture income has also been very good. I think that what government has been trying that in the doubling of agriculture income isn't real. I come from an agriculture background, from a family point of view. So I see that actually how it's shaping up. Therefore, that's something is real. Third is the, we talked about often employment. If you look at the self-employment, because of tourism picking up, spiritual tourism picking up, and in general, the aspiration levels of people in the even middle income group is rising. So that income is also not getting reduced. Therefore, from that angle, if you look at, as long as per capita income rises, I think the savings needs will continue to be rising. That's why the SIP is something will continue to grow. I think there will be time will come. So every time, every good thing has to take a pause and then take the next levels. I think having now seen a significant rise, maybe the time will come where people start thinking that, okay, how much return has come and so on and so forth. If the market remains flat, that is when people take sit back and see. Again, look at what are the alternatives. But as long as alternatives are not many, I think mutual fund will continue to be the driver of funder of the capital market in India. At the same time, from foreign investors' point of view, having seen a significant outflow the last 2 years, they cannot remain a seller in the Indian market ignoring the valuations. So today the Indian markets have remained somewhat flat. The valuations are becoming increasingly acceptable level. The time will come in the next 6 months. It will become attractive even for investing point of view, valuation perspectives. That cannot be ignored. As Feroze mentioned about earnings in the capital market have only been rising, which is nothing but an indication of Indian companies' ability to generate profit in a year on year. Only the rate of growth can vary. Therefore, the PE multiples doesn't go beyond a point. But time will come, that inflection point will come, where foreigners cannot ignore this point. And last is when the US cut the rates. I think they already began by 20 basis points. The next year, assuming scenario, it comes down to eventually about 1.5 basis points, 1.5% cut. Then that interest rates will also create the TINA factor for India to be part of the overall discussion. From overseas point of view, I see in the 26-27, FIS flows come back to India, therefore can lead to a next round of reasonably bull market kind of thing we can expect.
Okay, on that positive note, Bala, we won't keep you waiting too long, but Feroze, great to have you on the show, and we will call you next for that MSCI discussion.
Super.
Okay, thank you so much for your time.
Your GPS knows the roads, but not the off-roads. That's why you need grip that never quits.